Hello, I'm Nancy Steenson with Steenson College Coaching, and welcome to this week's College Planning Tip of the Week. Today, as always, with me is Jack Wang, who I'm excited to hear from him about some strategies for paying for college. Jack, you've been sharing some really interesting strategies for parents who are looking to fund college for their students. Do you have another one for us today?
Yeah, thanks, Nancy. Yeah, there are many creative strategies to pay for college. And again, as always in the series, right, this is for educational and entertainment purposes only. This is not advice. Please consider or please speak with your individual tax or financial advisor. And again, some of the scenarios I discuss in these videos happened years ago, so the numbers may be different. So, and the concepts may work, but the details, right, have changed. So again, please consult your own tax or financial advisor. This next one I want to talk about is really for those who are self-employed or own family businesses. And basically it involves the tax code again. I think you can find that a common theme in many situations is using the tax code and tax savings to help pay for college. And so very simply, as parents, if we're self-employed, we earn income and we pay it at whatever tax rate that we're at, both federal and state. And so one strategy can be is that we hire our children, right? And legitimately put them on the books as employees. Now, you can do employees or contractors, and there are definitely rules around that you have to follow. But the basic gist is that we hire our kids as employees. We pay them a reasonable wage for reasonable work, which makes that pay to our kids a business deduction to us as the parents. If you pay them up to a certain limit, so for example, the standard deduction when I was doing this, when I first started doing this years ago was I think $10,000 or something like that. So a business owner at that time could pay their student up to $10,000. The student would file their own tax return showing $10,000 in income, a $10,000 standard deduction, which would make their income zero and zero taxes owed. But at that time, the parent, the business owner, could get the deduction for that pay. So if you were in a 20% tax bracket, let's say $10,000 of pay to your kid meant a $2,000 tax deduction, right? 20% of 10,000 in that example. And so effectively what you're doing is you're shifting money that you as the parent would have owed taxes on, right, at whatever rate, you're shifting it to your kid who owe zero taxes. And then your student could then turn around and pay for college. Just to give you an idea of how this works over time, I did this with a family a few years ago. And if you added up all the tax savings and the tax-free pay that they would get, they could pay for all of an in-state public school at the in-state flagship, all 4 years with tax-free money. And this family did not have college savings before then. This is just strictly money that they would have earned anyway, just paying zero taxes on it by using this strategy. So imagine that, all 4 years of your in-state flagship university paid for with tax savings. I like to call that IRS scholarship, and there's no essay required, which is the best part of all.
Jack, that is brilliant. That is wonderful, and I love that you call it the IRS scholarship. I think that's funny. Thank you so much for sharing that. I do look forward to hearing more of this, and thank you everyone for joining us this week on College Planning Tip of the Week. We'll see you next time.